Okay, how's it going, everybody? Hopefully you can hear me. Give me 1 minute. We just had another live stream that unfortunately we're having to move from because of technical difficulties. So I know we had about 15 or 20 of you that were on a different live stream. Hopefully you now can get over here. Let me drop a official message and then we'll get right in. I'm doing this through my phone, so we're gonna figure out here how I can see the messages. Write to me if you are on this live stream in the comments or in the chat, if you will. Okay, it looks like I see a couple of you writing to me. Hello, sir. Hey, pharmaceutical industry here. Okay, cool. So we have, it looks like 16 of you and counting on this live stream. Great, let's get right into it. So I wanted to say one piece that I've not commented on in other videos to each of you who are interested in making acquisitions, who are interested in starting a business. And then I just want to do a quick Q&A. And I want to start doing more of these live streams. This one is a bit of a test. I did one of these 2 or 3 months ago, and I want to do these more regularly because I feel like it's the most engaging, right? It's easiest for me to answer your questions in real time because I don't have a lot of time normally, but when I'm here, I can just help you guys out. So I'm going to answer some questions. We'll get those ready. So if you have a question, get it ready. Or if you have something you want to talk about, get it ready. But first, I want to talk about the one thing that isn't discussed often in this game of entrepreneurship, and that is the emotional piece or the psychological piece, basically the internal side. You guys see my videos. I like to keep it pretty tactical, pretty dry. As a side note too, there's a ton more videos that are coming on debt, on equity, on finance, on seller finance, on capital stacks, on deal structuring. I think there's 10 new videos that are going to be coming out in the next 30 or so days, so stay tuned for all of that. And that stuff's going to be super technical, right? Just straight left brain, nuts and bolts, how to do business. I pride myself on not having fluffy content. I want it to be tactical. But the one thing I want to talk to you guys about before we go into your guys' questions or comments, etc., is that this entrepreneurship game is emotionally taxing and draining. It's a 24/7 grind. And I say that in regards to the fact that until you do your deal, you're literally putting your whole life on hold. My dating life, non-existent. My personal life, non-existent. There's no real income coming in because I was focused on doing acquisitions, deal flow, turning over rocks, talking to banks, talking to investors full time. And until you get that first deal, that's obviously pretty damn stressful. You know, I didn't talk about it before getting our first deal done because it just wasn't productive. But was it difficult going from 0 to 1? Yeah, it was difficult. It was mainly just draining. Exciting yet draining to every day know I haven't done a thing. Even if there's nice comments coming in on YouTube saying, Jason, you're doing this, you're doing that, thank you for the help. Okay, great, maybe I've helped you guys recruit an accounting firm or get a board, but until you do your first deal, you haven't achieved a thing. That is a stressful process. Now, I love it, I'm built for that. But I just wanted to be candid about how challenging that can be from getting from 0 to 1. And now that we've done the 7-figure acquisition, it's like we still haven't achieved anything that's seriously substantial. Yeah, I've had a good year compared to my prior self, but in the scheme of the real big players, the Goldman Sachses, the Blackstones, you know, these big players, whether it's private equity or the Sam Zells or the Berkshire Hathaways, like we're a minnow in a massive sea, right? We're not but a fart in the wind, to use somebody's phrase. We're not but a grain of sand in a massive beach. And so the reality of the situation is it's a constant, nonstop, 24/7 grind. And I don't mean grind in the traditional, it's, you know, grinding. Yeah, I'm going to get rich. I'm going to grind. No, I just mean like legitimately you're always on. And you're always expected to perform, and you should always be up for that task. So I never like to have fluffy content that makes this thing just seem simple or easy or a get-rich-quick scheme. Like, you can make a lot of money quite quickly. I believe that to be true, but I don't believe it's a get-rich-easy, you know, one of those 2007 BS, you know, marketing courses that were sold, you know, none of that scammy stuff. This is real business we're talking about here, and it's not fluffy. But with that, I want to get into a couple of questions here. I see we have 35 of you here that are live. Thank you for being here. If you would help me out, thumbs this video up real quickly. It helps me help you guys. Look, the more you guys make this an engaging process and a lucrative process for me, the more I'm going to want to give in return. So if you could thumb the thing up, that would be great. But let's get into comments. I'm trying to figure out how to do this. I'm on my phone. Let me see here. Top chat. Okay, so we have a whole bunch of chats. Hello, man. Hello, all. Pharmaceutical industry here. After how many years do you want to exit? So let's just go through these one by one, all right? And if you would thumbs the thing up, it really helps me keep helping you. Okay, how many years until you want to exit? I want to take Brighter Living Properties public on the New York Stock Exchange. For us to do that, it's probably about a 10-year process. Year one, which we're in right now, is about getting our first deal done and then operating it like we're superheroes, meaning in tons of cash flow, getting great numbers, audited numbers in time, and building the base case and really almost the case study for us to go to investors in the short near future and say, okay, we want to do this again and again and again. Year 2 through 3 will be about us probably growing from maybe 1 million to 5 to 20 million, depending on how able we are to fundraise and how many great deals we find. Years 3 through 6 will be about us growing on a big way, because once we build 3 to 4 to 5 acquisitions, we do really well. Then we're going to go to the big boys and fundraise real money. And then we'll probably do that from year 3 to year 6 or 7. At that point, we'll be, if we stick to the game plan, which we have a team built to do so, we'll be at a big size, 9 figures and beyond. And then from there, it's about getting those 3 years ready for an IPO, because you have to get your books ready for like 3 firm incredible years, because the last 3 years, if you've traded stocks, that's what investors look at. So you have to get your books right. So for us, that was a real quick off the cuff example of kind of our 10-year plan, but I see this as about a 10-year plan, because again, I want to get to the New York Stock Exchange so that we can trade in the manufactured housing industry at 22 to 23 to 24 times earnings. We buy these things right now at 8 or 9 or 10 times earnings, so that's an arbitrage. We're interested in that. Plus, I just think it would be an incredible accomplishment to go from having no idea that mergers and acquisitions even existed, which at this time last year, I didn't even know that existed, to in 10 years from now, when I'm say 37, 38, to be the CEO of a publicly traded company. Now, I'm about 1% of the way there. I have 99% to go, so it'll sure as heck be a process. I plan on documenting it here. We'll see if I'm successful. All right, so let's go through these. I'll go a little faster. What are the best Q&A go ask when you reach that point where next? What are the best Q&A go ask? I don't get exactly what you're asking, Mario. If you can clarify that question, I'm not quite seeing. Yeah. Okay. Comments don't put it in your pocket. Yeah, I agree. Good point. Basically, you're at the starting line now, going from negative 100 bare bones to 0 first acquisition, and now you're going to 100. Yeah, basically like 0 to 1. I believe, and I've talked to my board about this, my chairman about this, going from 0 to 1 is in some ways the hardest part, because it's momentum. It's Newton's first law of physics. Getting from 0 to 1 is the toughest part. When you talk to investors, your bankers, you have no track record. Even when you're talking to your board, you can be enthusiastic and excited and motivated and hungry, but you have no track record. So everybody's looking at you with a little bit of skepticism to say, who are you? Once you get the first one, I can already tell you in the last month, people talk to me very differently now. Brokers talk to me differently. Investors talk to me differently. People on LinkedIn randomly message me way more. Even many of you seem to think I'm suddenly different. I'm the same guy I was a month ago, but suddenly now, once you've done a deal, you've done a 7-figure deal, now you're quote unquote somebody. I'm still the same guy. Our group is still the same group. We still have the same game plan, the same mindset, the same beliefs, the same operational plans, everything. Yet once you get that first deal done, now you suddenly have a little bit more respect. And then from there, it's easier to get to number 2, and it's the avalanche effect, right? That little bit of snow that kicks off the avalanche. So that's really, I would say, the reality of the situation. Now let me see here. Let's go through some of these questions. If you have questions, drop them. This will probably be a 30-minute deal. I'm not going to go on this forever, but I do want to be helpful. So let's see here. What should we look for in a chairman? Well, if you go to my website, and I'm not upselling you right now, there is some stuff that's a little bit confidential for YouTube. You have to remember, I have a lot of people, bankers and investors, that search my name. I have a lot of people that are seeing my stuff on LinkedIn. So I don't like to A, swear here. B, I don't like to put, I would say, edgy content on YouTube or on social media. But on my website at jasonpaulrogers.com, you'll see there's completely free training. I literally just gated it because there's some edgy stuff there. Like when you go through it, you'll see I swear there, and I say some things that I didn't want to be public, but I go through the 3 or 4 main things you'd want to have in a chairman. But let me just give it to you right now. You can go through that training series at jasonpaulrogers.com. I don't even email you guys who know you put your emails there. Like, I'm not trying to upsell anybody with that. It's just, I wanted to gate that so that bankers weren't finding me and having a problem with me. But the main things I'd look for in a chairman: does he have deal-making experience in a big way? That's 1.
2, ideally, he's taken a company public, knows the process of an IPO, especially if you want to do an IPO, which I just talked to you about, we do. 3, is he super enthusiastic about the project, and do you guys have a great rapport? And then for me, that intangible is he or she a visionary? Is he or she a visionary? Do they believe that the Great Wall of China can be built? Do they believe the Great Pyramids can be built? As a side note, if those of you maybe went through engineering school, present-day civil engineers don't believe they could build the Great Wall of China nor the Great Pyramids. Well, of course, you and I, hopefully, if we're visionaries, believe, well, they were built in the past, why couldn't they be built now? Right? You want a chairman who believes the Great Wall of China could be built, I believe. But it's that IPO experience, it's that deal-making experience. And here's the kicker with your board. This is huge for any of you guys who have not, whoops, dropped the microphone there. Anyways, let's continue. There we go. For those of you guys who are building a board, proximity matters. This is one of the biggest points. So let me go back. I'm gonna back up real quick and I'll get to your guys' questions, but this is a huge point for you guys who haven't built a board yet. If you can build your board, have your chairman, have your banks, and have your acquisition targets all within 100 or 200 miles of where you live or where you're currently living, it will be so much easier for you to get your first deal done. I have a board that's located in New York, in Florida, in Northern California, in Southern California, and I completed my first deal in Nebraska. Now, some of you guys are maybe from Scotland or Russia or wherever, but for those of you who are in America, those are literally like the furthest parts of the country, and then I did a deal right in the middle. Now, what did that mean? It meant that I wasn't able to walk into banks with my chairman. I wasn't able to walk into banks with my CFO. I wasn't meeting with investors with my board behind me. That made it tougher. You can bet your sweet, backside that made it tougher than if I was walking with the whole dream team in there. So in retrospect, that was a mistake I made. Now, I didn't know enough about my industry when I put my team together to know exactly where we were going to consolidate. But ideally for you, if you know that ahead of time, you're going to say, okay, we're going to consolidate the Southeast, or we're going to consolidate the Seattle region, or we're going to consolidate the greater Boston marketplace. And then you get your chairman, your board, all of those people in that local area, and then they have the traits I just talked to you about in a minute, or I talked to you about a minute ago, then you're set up for success. Ideally as well, your chairman and your board is retired. That's another favorable thing. My chairman happens not to be retired. That's fine for me because I'm pretty good at operating solo. I kind of like that ability to just walk in myself and make things happen. But I'm not gonna lie, it would be easier if I had my chairman who's done billions in deals sitting next to me. You can imagine. So those would be some pointers for the board and for your chairman. Okay, one sec. Let's go through questions. I'm still learning how to do this with my phone here. And I don't have a ton of battery because the original live chat on the computer that I scheduled didn't work. I'm not gonna be able to go forever because my phone doesn't have a ton of battery, but all right, here we go. Jason, how can I learn to close people on the first call? Realistically, I wouldn't try to close people on the first call. And some of you guys are gonna say, oh, Jason, that's soft, that's beta, you should close on the first call. Let me explain. How do you know you want the person to be on your board on the first call? You've talked to somebody for 14 minutes and you're guaranteed that you want to go build a 7, 8, or 9, or 10-figure business together? Right? So to me, the first call, and I've had some flack from this, but I believe this is the best way to get a board. First call, you sell the vision, the dream, the project, how you're going to get it financed, what you're going to do, how you're going to do it, why this industry is super lucrative. Get the board members to be like, oh, shoot, I want to be with this guy. Second call, you interview them hard. Okay. I know I'm bringing value. Now you tell me this. How can you help me here? What can you do for me there? What would you bring to the table? Do you have X amount of hours to contribute to the project? All your questions. And then the third meeting, ideally, or call, that's when you guys come to an agreement. Okay, you join the team for X amount of equity. We're gonna have this process, and bam, you have your team. As a side note, a lot of you guys asked, do you send like super formal agreements when you get your board and this and that and the other? I didn't. I sent him an email from my rogersjason@blankmail.com email address. Hello, Mr. Board Member X. I am very excited about dominating the XYZ industry, and I'm excited to give you a Y% equity stake in this business, and we will formalize that equity position once we close our first deal, which we've now done, and literally actually our equity is getting distributed tomorrow. So that's what I did, and that worked for me. Now, was that the best way to do it? Who knows, but it works. So that's what I have to say in regards to that. Okay, let's go through these. By the way, if you guys can thumbs this thing up, it would help me keep helping you, all right? I'm going all in on delivering you value. Help me out by throwing the things a thumbs up, all right? It, again, helps me help you. Jason, how can I learn? Yeah, we talked about that. How much money did you make in your first deal? Look, I'm not a guy that exactly is gonna kiss and tell and show you my day-to-day bank account, but what I can tell you is I'm just fine. I'm better off financially now than before I started this process. Yeah, I'll leave it at that. Maybe in time I'll go into the exact how much I financed and got out of this, but I'm not a guy that A, wants to flex. Look, I'm not suddenly a 10-figure net guy, or like, let me put it this way too, I'm not a millionaire. You know, it'd be easy for me to go to you guys and say, hey, I did a 7-figure deal, I'm a millionaire. But any of you who had a good financial education would know that would be a BS statement, because there's debt, which if you ever go to a bank, it's your assets minus your liabilities. Assets minus liabilities. So don't be sold into something of, oh, you do a 7-figure deal, you're a 7-figure net worth guy. Well, in time you will be, yeah, and beyond. But just because you close a 7-figure deal doesn't mean your net worth immediately goes to 7 figures. You also distribute equity. So these are realities of the situation. But no, I came out pretty darn well out of this thing, and now I'm consistently going to be doing well unless we don't operate well, which we're very focused on operations, so we'll be just fine. Should I call speak to banks before a solid dream team? I believe in the process of speaking to banks pretty early, personally, for a couple of reasons. One, the sooner you learn the language of finance, the more successful you're going to be, whether you're using the seller finance channel, whether you're using commercial debt, whether you're using an SBA financing program, which if you're not in real estate, that's where I would play if I were you. The SBA program, get the money from the government. The government, they print the money, you know, can't really put it any more bluntly than that. But the sooner you can speak about amortization schedules and LTV and DSCR and interest rates and balloon payments, the better you're gonna be at getting the money. So I would start, especially if you're not a guy like me before I started that didn't know lick about finance, I would start talking to those banks pretty early. I would say you probably wanna get your board first, but it's never too early to talk to banks in my estimation. That's my take. Do with it what you will, but I don't see any reason why you wouldn't want to start building those relationships with bankers. It's always better to know the banker by name, know what his kids like to do, know where he lives, know his backstory, know if he speaks Spanish, know if he likes playing men's softball. It's always better to know that stuff before you ask for money. One, because it shows that you're not just a transactionally based individual. People like to be felt and connected with and understood. And then two, also, you in building that rapport are going to get a better understanding of what his lending parameters are so that you make intelligent asks to the right banks and bankers. Some bankers you'll find they don't like your industry. They had a bad experience in 2008. They won't touch the asset class. Doesn't mean it's a good reason behind it, but it's just the way they are. So you might as well know that ahead of time. Likewise, there's other bankers in your local area, I almost guarantee you, unless if you live in the middle of nowhere, that have had a great experience with your asset class, your industry, and they would love to finance your project. Getting that understanding before you need the financing is a good thing. The more bankers you know, the more powerful you're going to be perceived as, and really the more powerful you are in the marketplace because you know the people with the money. Okay, let's go through a couple more of these. We've got way more questions than I'm probably going to get to today, but that's okay. We're going to do the best we can. What would you say it's the 20% that bring those 80% results? I believe in that, the Pareto principle, the 80-20 Pareto principle. Yeah, I believe in that. I'm trying to think what would the 80-20 be in buying revenue. I would say it's probably motivated sellers and having a lot of them in your pipeline. That's probably the 1A most important thing of all, motivated sellers. If the seller's motivated, everything else will pretty much take care of itself. That's what I've seen. That's what other people I speak with who are in this game as well have seen. Because a motivated seller will really work with you they want to get the deal done. It's nice to have somebody on the other side that has the same end goal as you, right? Okay, let's go through more of these comments. What's happening, I'm having to scroll back through the comments at the beginning every time I answer a new one, so it's a little bit of a pain in the ass here, but let's see here, 1 second. Would you recommend starting a business from scratch if you only have 2,000 pounds, which is like 2,500 bucks to invest in bad credit like myself? No, I wouldn't. Unless can you be successful if you have 2G to your name and terrible credit? Yeah, you can do it. But would I suggest it? dude, unless if you're an absolute A-level stallion, champion, entrepreneur, salesman extraordinaire, leader like nobody's business, you inspire people, people want to follow you into battle, they will follow you off the cliff. Unless if you're that person, no, I'd get your money right first. How do you partner with a large corporation? Well, I mean, I'm not like a large corporation partnership guru, so I'm not going to pretend to be something I'm not. But if you can provide them more value than what you're charging in exchange, that's a good place to start. How many more good deals are you looking to make this year? If we can get 1 or 2 more good deals done this year, we'll be pretty happy. We would love to get, our true goal is to get to the $7 million in assets under management goal, but we will only do that if the deal makes a lot of sense. We have a team way bigger than what's being deployed right now. So operationally, we can handle at least 1 or 2 more big deals before we even need to expand, because I gave away a lot of the equity in Brighter Living to other people because we want to go and do big things. I'd rather own 50 or 60% of 100 million than 100% of 10 million. So we have the team to do 1 or 2 more deals without being frayed at the edges, but it's about doing the right deal. We're in a competitive industry right now. And some of these deals, these private equity firms and these huge groups are coming in and they're buying these things at ridiculously low cap rates, which, for example, like at 20 times earnings. It's pretty tough to make money when you buy something at 20 times earnings, right? Even in this fairly low interest rate market. So if the right deal comes, and we're hunting for deals every day. So if the right deal comes, we'll do it. But we refuse to get goofy and do deals just to, so I can post it here on YouTube, right? I'm not running Brighter Living to make you like me. I'm running Brighter Living to grow Brighter Living. Okay. How did you find your deals, commercial debt, so you asked 2 questions here. How did I find our deal? We cold called. The best way to find deals is to cold call sellers. Hey there, is this Bob? Hi there, Bob. Yeah, my name is Jason Rogers. I'm a principal at Brighter Living. Question for you, Bob. Are you the owner of XYZ business? Yes, I am. Hey, Bob, you ever thought about selling? If he doesn't say no, he's thought about it. And by the way, I would speak a little bit more slowly than what I just did right there to most motivated sellers, or most sellers. These are usually 60 to 70-year-old people. They don't hear that well. I'm speaking more quickly for you. For the sake of time, my phone doesn't have a lot of battery, and I want to hammer through these questions. All right, we use seller finance. I talked about that in another video, 88% seller finance. We had an offer for commercial finance, commercial debt. It's 6.25%, but it was on a 3-year balloon, which pretty quick. We didn't prefer that. Mr. Patel says, hey, what's up, dude? Okay, let's go through a couple more. When buying a business, is it better to buy the more expensive freehold property, or is leasehold a better choice? Look, I would have to know way more about your business to say that definitively, right? If you're leasing it, if you're buying a leased property, you're probably gonna buy it at a lower multiple, which means you can, in theory, use more commercial debt and have more free cash flow after debt service. But once you pay off the debt service, you don't hold a hard asset. I'm in the business of holding hard assets. We own, what? 7 storage bays and like 34 home sites and 33 homes. Those are hard assets. Now these aren't multi-million-dollar homes we each own, right? But we own hard assets. If you lease it, however, you're gonna be able to buy that business at a lower earning marker, but once you own it, you own less. Maybe the cash, you basically own the cash flow. And if you don't have that operator in there, there's nothing really of tangible worth other than the cash flow. Now, don't get me wrong, cash flow is great, and it could be a great way to start to buy something that's leased or to buy a business that really is just a service-based business, but also, no, you don't own a hard asset, so you're gonna be able to sell it for less when you go to exit. So it depends on your goals, it depends on a host of things, but that's a nice little primer. Where did you find your previous deal? I already answered that. We did it through cold calling. We got a huge list and we cold called, hey, how you doing? You wanna sell? That's how we did it. By the way, thumbs this thing up if this is helping, all right? Now, what exactly are you buying? We're buying manufactured housing communities, AKA mobile home parks. Hi, Jason, how many mezzanine lenders did you connect with, and what was the response like when you pitched using a seller note to finance your debt structure? We actually did look into mezzanine debt, which is a side note for many of you. Mezzanine debt is basically it's bridge financing. So let's go through a capital stack example. Say you're buying a $1 million project. It's a simple number. I always use $1 million, right? $700,000 is gonna be in, let's say, seller finance, okay? 70% of the capital stack is coming from that first position seller finance note. Say you're gonna put $100,000 into the deal, or you have a private investor. In this case, I know a lot of you guys are looking to do true no money down deals. So, okay, you have a private investor that you're gonna give 10% of the deal he's going to take 10% of the equity in the deal in exchange for $100K. So you have the $700,000 seller note, you have $100,000 in true equity, but you still need $200,000 more to get the deal done. Plus, if you want to overfinance, where are you going to get the rest of the money? The bank doesn't want to go over 70%. Your investor's saying, I'm not going for a nickel more than $100,000. That's where you bring in bridge finance. And that bridge finance is what kind of bridges the deal, right? It bridges the capital stack to 100% or beyond. Those bridge finance notes, as a side note, they're going to have super high interest rates. You're going to want to make sure they don't have a prepayment penalty. You're going to want to get out of them sooner rather than later. You're going to want to pay that note off first because it has a much higher interest rate than your first position bank note. How many of those guys did I talk to? A host of them. And look, they're money hungry. Like if they believe the deal is good, if they believe the deal will get them that return that they're looking for that mezz debt, then yeah, they'll dance. I have a big old list of them. So yeah, they're real. How much capital should I have to start this process? I mean, it's a loaded question. I was gonna say something inappropriate, but I'm trying to keep things appropriate here. But look, the short answer is, I believe it's ideal if you have 100K in net worth before you start. But I mean, I'll just be real frank. You don't have to have that. So it depends on where you're doing the roll-up, what kind of roll-up you want to do, if you know people with money, all kinds of things like that. But ideally, you'd have 6 months of money saved away so that you can focus on this full-time and live. All right, let's keep going. How many mezzanine lenders did I connect with? A bunch, to answer that question. What does your CFO on the board actually do? Got asked this on the phone, didn't know how to reply. At the beginning, they're not going to do a ton, but overall, they keep a watchful eye on your finances. You can Google, what are the roles of a CFO? I'm sure Google can tell you more than I probably can. But ultimately, they're going to help you manage the finances of your business, make sure that more money's coming in than is going out. And they're going to want to obviously kind of make sure from the macro position that your capital stack makes sense, that your deal structuring makes sense, that this whole thing's going to make you some money. Question on calling sellers. What are some things that you can make clear on a call when you get on the phone with the seller of a target company? That you can buy their business, that you have the tools of the trade to get the deal done. That you are the kind of person that can get deals done. That's what I would say. What are the best questions to ask before you know the next phone call you are gonna have this week will be possible? Dude, this is the same fellow, man. Your writing is always throwing me for a loop. What are the best questions to ask before you know the next phone call you're gonna have this week will be possibly starting agreements to evaluate? Dude, I'm sorry, I'm just not getting what you're saying. Did you have the money for the down payment? Look, I'm going to talk about the equity. I'm going to talk about equity in a subsequent video. I have a whole video on equity, so we'll talk about that. Stay tuned. That's actually one of the videos that's coming real soon. How would you structure this, and how early would you start raising the capital? Okay, so I knew I'd get asked this at some point. I have a whole video that I talk about that, about equity. So stay tuned to that, because the equity piece is probably the main thing that is throwing most of you guys for, I would imagine, and most of you guys that are actually at the point of trying to finance your deals, it's the equity portion, hey, get some skin in the game. That's usually what throws deals for a monkey wrench. So I'm going to talk about that at length in a video that I filmed already that's coming in the next couple of days. How is your initial deal structure? I already talked about how we structured the deal. You can go to a prior video. I talked about that. What was our sales team incentivization? They got, our sales guy, my guy JH, he got 2% of the deal. 2% of the deal size paid out in cash, and that's how he was compensated. Who is my current mentor? I would say my chairman and my board. Those are probably, and Warren Buffett and Charlie Munger and Sam Zell. Those are probably, because I'm in the real estate game more, I'm a little bit more focused on Sam Zell. I'm reading his book right now. But I have a lot of mentors. I don't believe you should just learn from one or two people. Any non-conventional methods to your industry, market research, fact gathering? Talk to tons. When you're recruiting your board and you talk to all those industry experts, that's when you learn about your industry. That's when you gain intel into your industry. When you're recruiting board member candidates. I had a couple of absolute brain exploding moments in recruiting my board. Actually, probably the individual who taught me the most about our industry before I knew what I was doing in this industry was somebody that didn't join my board. He was super busy and it just wasn't a match, but he gave me gold and actually told me, Jason, I would look in tertiary markets within the United States for your acquisitions. Now, 8 months later, I'm shooting this video to you from Nebraska, which if you know the United States, Nebraska is considered a flyover state. So he gave me great advice. But besides that, I would look into the industry reports, the shareholder reports for the publicly traded companies in your industry. See the type of acquisitions they're making, see the specs they're looking for in the acquisitions they make, really study those industry reports. Stupid question. Well, if it's a stupid question, I'm not going to read it. We'll move on. How to fund an acquisition without putting your own money, because whenever I talk to money lenders, they can finance up to 50%, but you should be able to get banks to go way further than 50%. If a bank's only going to go 50% with you, I usually laugh at them and say goodbye. Banks will go 70 to 80%, especially if you have somebody that's going to guarantee the loan with some net worth. Do you scale the businesses you buy? Yeah, we want to grow the net operating income, aka make the business more profitable. Absolutely. I posted something here on YouTube and on LinkedIn the other day. And by the way, follow me on LinkedIn, by the way. You guys should all be on LinkedIn. So connect with me on LinkedIn. All right, linkedin.com/in/Jason Paul Rogers. There's a shameless plug. Go connect with me there. But to answer your question, how do you scale the businesses you buy? Well, I mean, I need to know your business to really answer that question. But for us, it's about getting occupancy to 100%, increasing rents to some degree, minimizing expenses as much as possible. And then it's about doing subsequent deals and doing the same thing repeatedly. But of course, you have to master this business before you do that one. It's the old, he who chases two rabbits catches none, which is, I believe, probably one of the biggest traps for people doing M&A, is that they try to go so fast that they hate. And there's people, I'm not going to name names, but there are people that have tried to roll up the very industry I'm in, that have tried to catch two rabbits at the same time, and then they went bankrupt. So it's a real thing. How much equity did you give your board members and to your chairman? Because that information is now public, my board, I will not be speaking about that. Next. Oh, my guy Crawford. Good to see you, brother. All right, let's continue. Hey, Jason, do you scale the businesses you buy? Okay, actually, you just deleted that comment. Can I check out the templates you got from a little place that you guys probably all know? No, I have my own. I didn't use those. I mainly used my own stuff. And the answer is no, I'm not just going to give that willy-nilly, because then you guys, I've had multiple people that have literally copied my exact LinkedIn bio verbatim. Do you know how awkward that is for the people copying? If it's a mutual connection, this is the thing, you have to know how to use the social media platform you're on. If you copy people verbatim, one, it's just bad ethics. Two, if they figure out you copied, you look terrible. Three, if you're having to copy people verbatim, it doesn't say much about your entrepreneurial skill sets in the first place. And four, no, I'm not just about handouts. I mean, if this isn't enough value for you right here, then get out of here. You know, you can wire me some money. My PayPal's at jason@peakunderpressure.com. Throw me $1,000 and then maybe we'll talk. And not literally about sharing scripts. My point is, you know, at some point you have to do some of the work yourself. But I don't believe in copy and paste scripts to the point where you just plug in this, plug in that. Because part of what made me persuasive in getting my board very quickly and getting a great board is that it was real. I actually took the time to really research my industry and share why I believed we were going to be successful. I think that's super important. How many board members, what positions? Well, I mean, there's no it depends on your business. It depends on your ambitions. It depends on a lot of factors. We're trying to go public. I intend to take Brighter Living Properties public in the next 10 years. So for us, we have a big board of 9 people. We have a chairman, CFO, accountant, 2 lawyers, 3 real estate experts, and an M&A expert. I believe that adds to 9, right? But that was us. You don't have to do that exactly the way we did, but that's what I did. What's your next deal looking like? We're looking at a host of different deals, mainly through the middle states in America. Their deal sizes between, we're looking at all kinds of stuff from 300,000 to 7 million. We got another one, 20 million, that might be a little big for our second deal, but we're looking at all kinds of stuff. The thing is we're in a very competitive marketplace because we're in real estate. Real estate is a little different than traditional business buying. The multiples are higher because it's a hard asset, right? Hard assets, even if we had 100% vacancy, those hard assets you can still liquidate, right? If you guys are buying heavy machinery or buildings or homes in our case, right? Then that's a hard asset. So the multiples are higher. And because people like hard assets, because it's a little less risky in a sense, in our space, for example, the multiples are really high. It's super competitive. So we can't just go and buy, even if the seller's motivated, Everybody in my industry knows they have a high resale value for their asset. If you're buying, I've used the ideas of a florist shop before in another prior video. How many florist shop buying investors have you ever heard of? How many laundromat investors have you heard of in your life? Right? So if you get in one of those really random businesses, you can buy things at 2 or 3 times earnings. It's a little easier to make acquisitions in some respects because there's less competition, but it also means when you want to exit, you're going to be able to sell things at a lower multiple probably than me. So these are some of the pros and cons. But we're looking at a host of different deals. We're always looking at deals. It's a matter of if the deal makes sense. Jason, do you give your board part of the holding company or of the acquisitions or the deals? That's a great question. One of the board members has a little bit of a holding stake because he helped us with the legal work. So it depends. But yeah, right, so you have your parent company and then you have your holding company. Now, we had to do things a bit differently, and I'm not going to go into all of that right now, but the long and the short of it is that's a way that you can incentivize an individual or individuals on your team that put an extra amount of effort in the specific deal itself, is you give them some equity in that holding company as well as, or in the subsidiary as well as the parent company. Okay, would you say that there is a 20% that brings 80%? I talked about that. Yeah, talking to motivated sellers. Thumbs up, people. Amen, brother. Give it some thumbs up. I'm really going all in for you guys. We're going to wrap this in about 2 or 3 minutes here, but I want to answer 1 or 2 more questions. Thanks for doing this Q&A. You got it, dude. What did you put in your small deck and your long deck? I don't even know how you know that I had that, but that is true. I did have a shorter deck and a longer deck. A lot of industry information that, articulated to the individuals that were receiving that deck that we had an exciting enterprise that I was moving us into. Again, I found that information from doing my research, like I've talked about already. Jason, just got on your comments on being sector antagonistic and focusing on motivated sellers' cash flow and buying is where I can add marketing experience. I don't get that question. Maybe your comments on being sector antagonistic and focusing on motivated. I don't quite get what you're saying. Oh, you're trying to improve. Yeah, if you improve the marketing, that'll help the business. I think that's what you're asking. And yeah, if you improve the marketing of the business, will that help the business? Yes. Do you plan to buy the assets of your first acquisition? If yes, what will be the reason? We made an asset-based purchase, right? There's asset-based purchases and then there's buying the business itself. We bought the assets because we're in real estate. We want that hard asset, right? So the reason we bought the assets is because it's the assets that produce the cash flow. Here's a recent experience. I was on the phone with an owner of a 43.5 revenue, and then you stopped writing. Okay, great comment, man. We got my guy Crawford. What's good, brother? Well, not a question. Thank you for doing this. My first deal tanked. Oh, shoot, I'm sorry to hear that, bro. I went back to my comfort zone for 2 weeks and bought a small apartment complex, waiting to get our next deal underway at 9 a.m. tomorrow. Dude, get back on the train, baby. That's the only way to roll. Let's continue. Congrats on your first deal. What's the biggest lesson from the first deal? That's a good question. I'm going to take a quick sip, hydrate, and then let's see where my battery's at. I can't even see it while I'm live. Okay, what's the biggest lesson? You have to be willing to go through consistent discomfort. That is the biggest lesson. It's not interest rates. It's not amortization. It's not learning to speak with bankers. It's not learning how to cold call, albeit some of those things I already had. It's realizing that you get to where you want to go by, as Tim Grover would say, going through hell first. Yeah, this guy's saying like it, thumbs it up. Yeah, again, it really helps, right? The more you guys engage with me, the more I'll engage with you guys. Do you consider shrinking population due to people having less kids or no kids? That's a good question. I'm not too concerned with it. I'm not too concerned either with a meteor crashing into Earth and destroying this apartment that I'm in right now, but things can happen. So no, the thing I'm actually betting on in our business is that there's a lot of baby boomers that are about to retire, which means a lot of motivated sellers, and also in our industry, a lot of tenants who are retiring without a lot of money that need somewhere affordable to live, which we provide. What are your thoughts on rolling up financial services brokerages, service brokerages? I would need to know more about the business. Not going to pretend. Look, I'm not a guy. So you guys know when you're asking me questions, what can I help you with? What can't I help you with? I don't know the nuances of your business model, almost certainly. Now, there's some businesses I know more about than others. But what I can tell you is if it's fragmented, if there's considerable gross margins, if you're able to put together a great operations team with operational leaders who have experience operating your asset class or your industry, and if you're super hungry to do deals in that asset class, then you can be successful. Can you go over the numbers in the next video, the purchase price? I already did that in a prior video, my friend. Go check it out. What's up, welfare gang? Hopefully you guys aren't on welfare. If you are, get a job or do some deals or hustle. Continuing. On the same question, can you expand about positioning, how you make the seller understand you're not a rich funded kid? Connecting with sellers is an interesting conversation. And every industry is going to be different. Every industry is going to be different. You know, there's advice out there about there's one way to, this is how you talk to potential sellers. And what I would say is I disagree with one size fits all, right? Some of you guys have a 28 waist. Others of you guys are fat, you have a 54 waist. Would the same pair of jeans fit on Mr. 28 as it would 54? Sellers aren't so different. Some sellers, I've met with sellers who at noon, they want to start killing beers. And I'm not gonna lie, I've killed a couple of beers trying to get on with sellers, and often that works. I've been with other sellers that are absolute, religious, straight and narrow, buttoned up. This is the way it is. Sellers are not just sellers, they're people. And within the industry you're in, there will be deviations, generalizations that aren't always true, but are usually true about the sellers or the operators that are currently owning the businesses that you're inquiring about. So in some industries, with some sellers, they want you to be the rich guy that wears the suit, that's connected, that's got the board, the team. I can tell you that there were certain sellers I talked to that were not impressed, and if anything, were thrown off by the suits, as they called them, that we have on our team, that were more comfortable connecting with somebody in blue jeans. So the idea of connecting with sellers isn't just, this is the way you connect with sellers. No, it's about really getting into the psychology of the specific human being that you're talking to and having enough respect and empathy for that person. Again, respect and empathy for the person you're talking to, in my estimation, to actually understand what is this individual person looking for. Not every seller is simply motivated by money. Some of them are motivated by passing on their business to somebody they know, like, and trust that will keep the business operating at a high level for the next 15 years. Some people are motivated by simply getting out. Like, everybody has a different motivation, so it's not this one size fits all. All right, I'm gonna do 1 or 2 or 3 last questions, then I'm rolling. Hey, happy birthday. Yeah, by the way, it is my birthday. Thank you, man. 28 today. August 25th, 1991 is indeed my birthday, the day I was born. Did you show your board the deals that you were looking at before you approached the banks? We kind of did that simultaneously. I did that kind of as a, I'm talking to a bank. I was talking to everyone about the deals we're looking at, and that's what I do to this day. Not, YouTube. I'm not going to tell you about all the nuances of my deals, but my internal team, yeah, we're always talking about it. In the good banking relationships I have, yeah, I'm always telling them, hey, we're looking at this, we're looking at this. And at this point now, people, especially loan brokers, as well as some bankers, reach out to me. Hey, Jason, what do you got on the pike right now? Hey, Jason, what are you looking at right now? Hey, Jason, you got anything like this? Right? Because that's the track record that you're building. Deals are starting to come to me. Hey, Jason, I know you're in this industry. Do you like this deal? Hey, Jay, a lot of messages and things now come to my inbox. A lot of different lenders and investors, hey, Jason, you got any deals right now? But you have to work for that. I've worked my fanny off over the last 9 months for that, right? But that does happen over time. Are you building a sales commission fee in the purchase amount to comp your team? Yeah, I already talked about that. I gave the first guy that did the deal 2%. Can we finance the deal from 2 banks, like raising 20% from one or 80% from one and 20% from the other? No. And I'm going to talk about that in a subsequent video. It comes down to first versus second position. First position is where every bank wants to be, which means if you fail, or if I fail, or if Billy, who took money out from a bank, fails, who gets to foreclose the business and liquidate it and sell it so that the bank gets hopefully all of their principal and ideally all of their interest back, but at least their principal back? Well, if a bank is in second position, that means the other bank gets to take all the money and then give whatever's left, the crap, the scum, the final 2%, the breadcrumbs. The second bank would get that, right? So every bank wants first position. I'm going to talk about this in a subsequent video, so stay tuned. And hey, if you're not subscribed, subscribe to the channel, all right? Because I have a ton of videos. I think there's 10 new videos that are coming talking about equity, debt, finance, deal structuring, seller finance, all coming in the next about 30 to 45 days. So stay tuned. All right. How much equity do you recommend giving your board members and your chairman? I already answered that. You probably want to keep 70%, give away about 30. Man, I have more questions I'm able to answer. When are you going to refinance? Probably in a year or two. You have to be comfortable being uncomfortable. Amen, brother. What percentage of off-market deals are you focused on? About 100%. You want off-market deals. They're better. They're more favorable. Happy birthday. Thank you. How do you prevent from getting sold by banks? You can't. You're the one. No, you don't get sold by banks. You tell the bank, I have this deal. You're welcome to offer me a term sheet for how you would finance it. And either you accept or you deny. Period. I actually have another video coming up, speaking of which, about negotiation, where I will talk in greater length about staying rational and never taking the short end of the stick. Okay, what has your experience been speaking with sellers? Is it your approach just, hey, are you looking to sell your business? Also, at what point do you go out to visit them? Yeah, I like to visit sellers in person. I like to build a bit of rapport and understand what the seller is truly looking for. I try to explain to the seller what our intentions are with potentially buying their business and how we would operate it. I prefer working with sellers who have a high level of pride and ownership in how their operation has been taking place, because those are usually the best businesses. And usually it's a lot of rapport building as well as a lot of honest, straight talk about what I can do for you and what you can do for me, and if we can come to terms, and either we do or we don't. And do you know what? We're going to stop right there. Thank you so much. If you've liked this, thumbs it up. If you want me to do this again, let me know, and I will talk to you in the next video.